where
18% of the Pacific Palisades houses have a fair plan.
Okay, so hold on. Let me, you know me, I swing in 9 different directions. Let's talk about that for just a minute, because 32 years in the mortgage business, I understand insurance more than most, but nowhere near at your level. So let's talk about that for a second, because there's probably some speculation around that we're all wondering. Let's just say the fund has $1 in it, and the claims are $10, right? Which it's much more than that. How is the state going to deal with that? We can all think of, they're going to raise taxes, they're going to print money, they're going to have a bond, they're going to do something. But what is your opinion, right, until we have facts about how are they going to solve for that shortfall in the California state plan? And then I want to get back to that other point.
Yep. So really what would transpire in the way that California Fair Plan is the admitted carriers backstop that. The easiest way I like to give analogies, because insurance is not very logical a lot of times. Think of Social Security, right? We all pay into Social Security. And when you get there, you expect to have the money.
Right.
Right? Now, if there's no money in there, you're out of luck.
Right.
So what the Fair Plan does is the admitted carriers, as part of collecting their premiums, they pay in a portion of that to build up that fund.
Okay.
And that fund should be used for that. If that runs out, those admitted carriers, based off of how much they insure the state, will fit the bill for that. So State Farm has 25%. If they're short $100 million,
State Farm's going to pony the 25% of that money.
And the other carriers are going to do this. That's why State Farm just a couple of days ago said, hey, we need to do mandatory increases to be able to start collecting enough. And they also have the option to go further and go back to the insureds.
Yeah.
Just like federal government, right? Oh, the federal government's going to pay for it. Who's the federal government?
Yeah,
We are. So the insurance company is getting their revenue from where? Their insureds. So if they run out of money, where are they going to go to get more money?
Right.
Either higher rates.
High rates, you and I, homeowners.
And what do we know what's going to happen with what's going on with the recovery here?
Yeah.
The thing. I heard a stat that somewhere at the Malibu fires, which were really horrendous, right?
Sure.
A lot of destruction. About $4 billion in losses.
Yeah.
They're speculating over $250 billion.
Wow.
So the magnitude of this is so much more.
Yeah.
And I really try to, we've seen this before.
Yeah.
And unfortunately, we're repeating history, right? The Northern California.
For sure.
We're repeating the same thing.
Well, plus it was a combination, right? It wasn't just a Palisades fire. What happened in,
Yes.
Okay, so let me expand on that for just a minute.
Yeah.
And as I prepared for this time with you, I'm like, hey, Cory, we talk so much more personal than we do business, but there's sometimes where
it's important right now.
It's important right now, and there's not a lot of experts in the field. There's a lot of opinions, right? Because people don't know, do I believe what the big three are telling us that's on the media, or do I just want to get like my data points from the people, boots on the ground? If I understand correctly, there was a recent change from the Deputy Insurance Commissioner about allowing the big carriers to now increase that, right? Because before they capped them to a certain degree, but now they're going to allow them to because they really need them to continue to write insurance, which kind of was this problem that started a couple of years ago. You limited them, so they stopped writing policies or slowed down.
Yep.
And then people had to go to the California Fair Plan. Am I correct that there was kind of an announcement or change from the Deputy Commissioner? And how will that now impact, call it a homeowner? And then I want to dig into the homeowners associations.
Yeah, so from that perspective, yes, what we talked about with only being able to raise the rates a certain percentage. So during COVID, they capped it and said for the first 2 years, these insurance carriers can apply for a rate increase, much like the utility companies do.
Sure.
So they put that in. If it's above 7%, it goes to additional audit and thing. It's too much red tape. They have to give all this information so they don't do it.
Got it.
Because it's too intrusive.
Sure.
Right. You have a lot of watchdog groups that want to have all this information and see everything and critique how much money you're making and all those things. So they do that. So yes, the carriers have said, if you want us to stay in the market, then you need to let us raise rates.
Right.
So they can do it. So they're going to make some exceptions. Those haven't gone through yet
Got
completely.
It.
They're also looking, which is kind of interesting because the California Fair Plan is a plan of last resort, but now they're expanding it.
Okay.
So right, you have a government agency that's regulating a group or a function of the economy.
Yeah.
But they're not actually doing it because the carriers are the ones that are actually carrying.
They're really the responsible party to a certain degree,
right.
Kind of under this blanket of the state.
And they just announced another thing that you can't cancel a policy for another year. So
right.
Again, company not making money, told that they can't stop providing that service for another
Right.
year and continuing to lose money. So wherever you are on the spectrum of, hey, these insurance companies are making a ton of money,
Yeah.
this and that. I mean, there's a lot of money that's being pushed around. But at the end of the day, for a typical homeowner, right, things are only going to continue to get more challenging.
Right.
If we're staring at $250 billion in losses, where is that going to come from?
Right.
It's not going to take any air out of the room. And really the thing that we were hoping would happen before this happened is you let those carriers raise their rates, they come back in the market, and now there's some competition.
Yeah.
And what does competition do? Competition should hopefully
Drive the price a little
price
bit.
down.
Yeah.
If you're in that non-admitted or that 500 credit score, you got no option.
Yeah.
And that's really what it is. So you're trying to push them back into this admitted market because traditionally it was 15% that were in the non-admitted. Now it's going
now what is it?
50 plus.
Wow. Because I know I'm dealing with 30 clients a month. Either they have insurance or they're trying to get insurance, and
that used to be an afterthought, right?
It did. I mean, we're now forcing clients to get insurance
First.
within the first 3 days of a transaction, or else. And we've had clients actually cancel contracts. The home I just sold recently that I had for 25 years, it went from $3,000 forever, $3,500 a year, to $6,000 to $8,000 to $12,000.
Yeah.
And then someone who bought my home had a combined California Fair Plan. For those who don't know the California Fair Plan, it's a state insurance fund. It only covers you for fire. You still have to then go get an additional policy for
Wrap
inside
policy.
contents. What's it called?
A wrap policy.
Wrap policy that covers things like water damage or things like that. The person who bought the home that I sold was paying like over $20,000 a year. There's some people who've closed escrows locally here in Coto de Caza. We're talking $25,000, $30,000 policies. And so it's interesting. We haven't seen a total slowdown of buyers because of insurance. We've watched them become more cautious, that's for sure. So go ahead.
No, it used to be, right, do you have a proof of funds, right? Are you pre-approved?
Yeah.
Now, you have to have that.
Yeah.
But now the next thing is, right,
insurance.
What about the insurance?
It's part of the
situation?
transaction now.
Yeah.
So you have real estate agents with people buying residential, and then we're going to get to HOAs in a second.
Yeah, no, it all ties together.
It does,
Yeah,
but the HOA is your specialty, and that I think there's a bigger problem coming, as you know, that we've talked about that I want to talk about. But one last thing, great real estate agents today are making it part of the contract.
Yes.
You have to get your insurance in the beginning because you don't want to go 10, 12 days in a contract, and all of a sudden the person's like, I got an insurance quote for $37,000. I can't afford that. And so really good real estate agents are getting in front of that.
And we've been putting together some educational stuff on that because it's a new education that those
Totally.
realtors need to know because it changes the conversation of where you're starting. And we see it as we work with a number of different professionals who say, send us 2 different properties you're considering. There might be such a delta in the insurance that could impact the home buyer's decision
For sure.
of which, if it's in Coto de Caza and it's right up against fire and it's going to be $50,000, or you can go somewhere else and it's $20,000.
Right.
A $30,000 a month additional carrying cost or a year is going to weigh.
It's a big difference.
Alter your decision. So now, insurance is coming into play, and like you said, it needs to happen earlier instead of, oh, we're just about to close. Yeah, go find some insurance real quick, and then we'll close this loan.
Yeah.
So it's changed the order of operation.
Well, one quick final note on that, and I do this a lot. Here's my final note, and then we're going to move on to HOAs. What a lot of people don't realize is when you bind that new policy, a lot of the non-admitted carriers, call it your lower credit score, you got to pay up front. And if you cancel in the first, I think it's 90 days or so, that portion of the premium is not refunded.
It's called earned premium. It's kind of like in a retail, like a restocking fee.
Yeah.
Right? You can buy this, but when you bring it back, we're going to charge you
a restocking fee.
So yes.
So like I had a client who didn't have a choice because they didn't do their job. They ended up taking really bad insurance. Mm-hmm. They found better insurance a month later. They were eating that, call it 90